Good evening, friends. Welcome to the Financial Awareness Program by Vardhaman Consultant. My name is Amit Vardhan. We'll just wait for a couple of minutes so that everybody can just log in. I am sure people are just trying to log in. So give me a couple of minutes. We should start the program in a couple of minutes. Till then, just you can just let me know if you can hear my voice clearly, whether you want me to increase the volume or decrease the volume, whatever it is. So friends, can you hear me? Yes. Okay. Sumit says clear. Can anybody else can just tell me whether he or she can hear me clearly, so that we can proceed with the webinar on the financial awareness. Anybody else? Okay, Mr. Rajakumar is also saying that he can hear me clearly. Okay, that's fantastic. So let a couple of more people just join in. Miss Nupur Desai is also saying yes, it's perfect. So fantastic response from you guys. So we can start in a couple of minutes so that everybody can just join in so that everybody will just log in. We'll just wait for a minute more and then we'll start by 6:03. It's 6:02 right now. We'll start by 6:03 sharp. So just a minute more. That's it. Also, I would like to tell you that if you have any questions, you can keep writing that down so that as and when the question comes up in your mind, we can take them and we can try to solve those questions. Okay, so and there will be a lot of pointers to learn in. So put a pen and a paper, try to jot down the points. It would be really helpful for you guys. Okay. Okay, so as I said, 6:03 will start. It's 6:03 and we are starting. So okay, so what are the types of investment alternatives you guys know? Okay, so write in the comment box what are the investment alternatives you are aware of. Okay, come on, you can tell me what are the investment avenues available, okay, which you know. Try to trickle down. I want to understand how much you guys are with me and how much you can check or how many products you know for investment. Come on, friends. I don't want to keep a monologue. It would be an interactive session. So I want you guys to also revert. So tell me, what are the, okay, Mr. Raja Kumar says mutual fund stocks. Very good, Mr. Raja Kumar. Anybody else would like to contribute to the investment avenues available which they know about? Anybody else? Any other avenues? Okay, PPF, FD. Very good, Mr. Raja Kumar. Okay, there are still a lot many avenues which are available, which you can certainly know, which you certainly know, and you can list down. So please tell me, guys. Okay, so that we can check, into it. 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 So that we can check, into Okay, let's start with the alternatives which I wish to tell you. Okay, before the portfolio management services, okay, we all know about fixed deposit, PPF. We also know insurance. Uh, we also know mutual fund, as Mr. Rajakumar said. Many of us has missed about the main types of investments, which are gold and real estate. These are also very sought out of investment avenues especially by our Indians. We invest heavily in gold and real estate. The financial asset is of merely 2 or 3%. Okay. So let me come to the different types of alternative. First is portfolio management services. Okay. So portfolio management services, uh, in this, basically, a portfolio is managed by a big fund house of on which the minimum investment criteria as per SEBI is currently 50 lakh rupees. So if you have 50 lakh rupees in your pocket and if you wish to invest in a PMS, yes, you can do that. Uh, but the taxation and everything needs to be checked whether it is feasible for you or not. Usually for PMS, it is taxed as and when the stocks come in and go out. Okay, so hence it is a little bit problematic in terms when the taxation is comes into picture. Okay, also we have to rely a lot on the fund manager for the investment which is going through. Okay. So what are the basic types of portfolio management services available? One is discretionary and the other one is non-discretionary. In discretionary, usually the fund manager has full independence to invest as per his or her requirement. Okay, and in non-discretionary, the fund manager will have to take prior permission of the client before investing any amount. Okay, so it is first he will have to take the client's permission that he feels that this particular stock or this particular debt instrument is feasible, and hence they want to invest into this particular security. And then once the client gives the confirmation, then the fund manager can buy the same. Now let's come down to mutual funds. So I hope you have read about mutual funds. So let's dig a little bit in detail on mutual funds. So mutual fund is pool of money managed by a professional money manager, basically a fund manager. Okay, the objective and risk level are outlined in the document called prospectus. Okay, so all the details will be given in the prospectus. So mutual fund is also known as an open-ended investment field. So you can buy and sell anytime you want. Okay, the mutual fund, most of the mutual fund can be bought at any time and sold any time as per one requirement. A few scheme will have certain amount of lock-in period, like the ELSS fund, or basically better known as the tax saving funds, or some solution oriented fund which are known as retirement fund or children's fund, which usually have a lock-in period of 5 years. Okay, so let's come down to the benefits. We all know about mutual fund, but do we really know what are the benefits available with the mutual fund? Let's take them out. So basically you get professional management. So we all are good at something, right? Like for example, Sachin Tendulkar is good at playing cricket. Okay, so if he is given a task of managing mutual funds, he would do a terrible job. But when ask him to score a century, probably he will do one of the best job. So we always require professional for our work. When we try to manage our own money, it is difficult because we try to go down with the emotions. Emotions plays a huge part. Hence, it is always advisable to take a professional help, and mutual fund provides that. it provides professional management to you at a very cost efficient manner. Hence, a mutual fund is always better way of investment. Diversification. The best part of the mutual fund is that you never invest your whole money into one particular security, whether it is debt, whether it is equity, or a combination, or commodities, whatever it is always uh, diversified in different levels as per the scheme arrangement. It can be diversified into different stocks. So if one stock fails down, the other stock will give you a better return. Hence, in a balanced way, it gives you a better and a higher return to you. I hope my point is clear. If anybody has any questions, can just put it forth. Liquidity. As I told, mutual fund can easily be sold anytime and easily bought anytime. Hence, everything which nowadays can be done at a click of a button. You don't need to go physically anywhere. You can do this by sitting at your home, office, or even while traveling by the click of the button, even from your mobile phone. So very best feature is liquidity also. Flexibility. So mutual fund gives you with liquidity flexibility as to you can buy as much amount you want as and when required. So you can do an SIP also, you can do a lump sum investment, you can do a systematic transfer plan, you can do a systematic withdrawal. So there are a lot of options available in mutual funds which can be taken good care about. Okay. So the limit, so nowadays in fact one can buy as little as 100 rupees of mutual funds, and for the higher amount there is no limit as such. Tax deferral. So one of the best benefits of mutual fund is tax deferral, that you can defer the tax as much as you want. For the simple example, if you invest today in a fixed deposit or in a bond, so or in a bond, okay, so the bond will give you returns as per the interest tenure, probably monthly, yearly, whatever the interest on is. Same is with the fixed deposit, it will give you yearly or quarterly interest to you. Point is, whenever you get an interest, that is taxable to you. Okay. What happens in mutual fund? Whenever you buy, until and unless you sell it, there is frankly no tax. Okay. Only time when you sell it, there would be a tax. So how much tax it is? Basically in mutual fund, depends on the type of mutual. One is debt, other is equity. If it is debt taxation, it would be as per your tax slab if the mutual fund is has less than 3 years, and if it is held more than 3 years, then it would be flat 20% after indexation. Okay. I hope you get this point. If you are not getting the point, just let me know. I will try to cover that. Economies of scale. So because there is a pooling of large sum of amount of into thousands of crores, or of 2000 crore, 5000 crore, even 25,000 crores at one single point, and one single fund manager is taking care of that money, one or couple of fund managers taking care of that money, the cost of fund management comes down heavily, and hence it is very economic for the entire investors to invest into mutual funds. So the next is investment comfort. Once an investment is made with a mutual fund, they make it convenient for the investors to make further purchases with little documentation. Nowadays, you can say there is almost no documentation. You can just click on add purchase and you just do the payment and you are done. It is as simple as that. It is very convenient to add or remove your money from the investment of mutual funds. Regulatory comfort, SEBI, which is a very good regulator, regulates and does the necessary checks and balances so that the investors are benefited to the highest. So I hope till now you have understood most of the things which I have been taken care. Okay, Mr. Raja Kumar is having a question on indexation. So let me take that question for you before I go further. Indexation. Okay. So Mr. Raja Kumar, in debt, so I just put tax deferral here. So in debt, only in debt instruments the indexation comes into picture. For example, I have purchased a mutual fund of debt mutual fund, say of rupees 1 lakh, and today the current value is say probably 2 lakh rupees. Okay, I'm just giving an odd figure. I'm just giving a normal figure so that we can just come into the picture. Now, so if your 1 lakh has gone to 2 lakhs, your profit is say 1 lakh rupees after 10 years. Okay, point here is that due to indexation, the value of that 1 lakh, okay, probably has gone up to say 1 lakh 40,000 or 1 lakh 50,000, and your actual tax would only be 50 or 60,000, okay, as per the deferred tax. This indexation values are given by RBI, from which one needs to calculate what is the actual index value of the investment, and after that you can come down to what your actual index profit are, and you will be taxed only on the index profit. So frankly speaking, your taxation is usually not more than 10% after indexation. I hope that is clear now, Mr. Raja Kumar. So what type of funds one can buy? Liquid funds, debt funds, hybrid funds and equity funds. So first I would like to take you to a small video on liquid fund. Here it is.
अरे गुड मॉर्निंग दीपक। क्या भाई यहाँ लेट कैसे हो गया है?
अरे यार मैं घर से निकल ही रहा था कि राहुल का फोन आ गया यूएस से।
मॉर्निंग अंकल।
गुड मॉर्निंग। राहुल यानी कि तेरा होने वाला दामाद?
हाँ, हमने शादी की तारीख पक्की कर ली है। अब बस 4 महीने में शादी की डोली उठेगी।
अरे ये तो बहुत अच्छा। तो तूने पैसों का इंतजाम भी कर लिया होगा?
हाँ, ये भी मैंने अप्लाई कर दिया है। हाँ। और 10 दिन में वो भी पैसे हाथ में आ जाएंगे।
तो इस पैसे को सेविंग्स बैंक में रखने वाला है?
सोचते ही रहा हूँ। शादी में सिर्फ 4 महीने रह गए हैं। फिक्स डिपॉजिट तो कर नहीं सकता। अब मार्केट में लगाने में रिस्क।
तो एक काम कर, ये पैसा लिक्विड फंड में डाल दे।
एक्सक्यूज मी, ये लिक्विड फंड क्या है और इसके फायदे क्या होते हैं?
बेटा, लिक्विड फंड मनी मार्केट इंस्ट्रूमेंट्स में पैसा लगाती है, और सबसे अच्छी बात यह है कि इसमें कोई मैच्योरिटी पीरियड नहीं है, यानी कि सेविंग्स बैंक अकाउंट की तरह हम अपना पैसा कभी भी निकाल सकते हैं।
क्या पैसे निकालने पे कोई पेनल्टी है?
अरे नहीं, लिक्विड फंड में आप कभी भी रिडम्पशन कर सकते हैं। नो लॉकिंग पीरियड, नो पेनल्टी, और इसमें तो कोई एग्जिट पेनल्टी भी नहीं होता।
अरे वाह अंकल, ये तो वाकई में बहुत बढ़िया है।
और सबसे अच्छी बात यह है बेटा, लिक्विड फंड से बेहतर रिटर्न्स मिल सकते हैं।
कोई रिस्क?
अरे ना के बराबर।
अरे अंकल, इस हिसाब से तो आपके शादी के सूट का खर्चा और आंटी की साड़ी का खर्चा भी निकल सकता है, वो भी सिर्फ लिक्विड फंड की बदौलत।
बेटा, जब तुम इतनी बात समझ गए हो तो अपनी सैलरी भी लिक्विड फंड में लगाओ। अरे कम से कम तुम्हारे महीने भर का पेट्रोल का खर्चा तो निकल सकता है।
अरे हाँ अंकल, ये बात तो आप सही कह रहे हो। मैं भी अपने पैसे सेविंग्स अकाउंट में रखने की बजाय लिक्विड फंड्स में रखूंगा। अरे वाह अंकल, क्या आइडिया दिया है।
अरे तभी तो हम तुम्हारे बाप हैं।
I hope you have understood what liquid fund is. I will just try to brief it again. Liquid fund is basically a fund where you can invest your money for a very short duration of time, say for 10 days, 15 days, or even a month. Okay. So for 10-15 days also you get good amount of return, usually which you don't get in your savings account. The return of a liquid fund usually ranges between your savings account return and your fixed deposit return. Okay. So one way of getting good amount of return is to park your savings account money into liquid fund, and as and when you required you can remove small amount also. If for example if you are investing 1 lakh rupees, it is not necessary that you have to remove that 1 lakh rupees only. You can even remove 10,000, 50,000 or full 1 lakh rupees as per your requirement. Okay, I hope everybody has understood what liquid fund is right now. So let's go to debt funds. Debt funds are basically instruments where for example your where bonds, different types of bonds are available, and the investment is done in different kinds of bonds, for example public sector bonds, RBI bonds, or company bonds, where you get better returns than your fixed deposit, and you also get indexation benefit. Indexation benefit will also be given in liquid funds, because it also comes under debt fund category. Okay, so taxation in liquid fund and debt fund is same. You get indexation benefit in both liquid fund and debt fund. Okay. Now let's come to hybrid fund. Hybrid fund is nothing but it is a mix of both equity and debt fund. So you will have some components of equity and some component of debt both into picture. So what would be the component of equity and debt? Again depends on the type of scheme. Some are conservative schemes which will have equity component of around 30%, 30-35%, and some are aggressive scheme will have equity component of 60 to 70%, 65 to 70%. Okay, so it depends. So if it is a conservative scheme, then the taxation would be a debt fund of debt funds, and if it is an aggressive scheme, usually the taxation is of equity fund. Okay, so let me play a small video of balance fund for you guys, so you understand how debt fund, balance fund can work for you.
अमित जी, कैसे हैं आप? जीवन में क्या हो रहा है?
सब बढ़िया है सुनील। मैं जीवन का आनंद ले रहा हूँ। अपने खर्चों के लिए बैंक एफडी से एक निश्चित राशि मिल रही है, इसलिए सब कुछ ठीक है। और बताओ तुम कैसे हो?
मैं भी ठीक हूँ। बस आप ही की तरह मुझे भी अपने निवेशों पर निश्चित धनराशि मिल रही है, पर मैंने बैलेंस फंड में निवेश किया है ताकि परिपक्वता के समय मुझे बैंक एफडी की तुलना में बेहतर राशि मिल सके।
तुम क्या कह रहे हो सुनील? क्या मुझे समझा सकते हो?
बिल्कुल। देखिए, हम दोनों ने 15 लाख रुपए 10 वर्ष की अवधि के लिए निवेश किया है। आपके बैंक एफडी पर आपको 8% ब्याज की दर पर 10,000 रुपए प्रति माह मिलते हैं। मैंने बैलेंस्ड फंड में निवेश किया है और SWP 8% की दर पर मुझे भी 10,000 रुपए प्रति माह मिलते हैं। तो 10 वर्ष में हमें एक जितनी राशि मिलेगी, 12 लाख रुपए।
तो अंतर क्या है?
देखिए, सबसे पहले तो बैंक एफडी के ब्याज पर 10% TDS लागू है, जो बैलेंस फंड में लागू नहीं होता।
ओ हाँ, तुम सही हो।
और दूसरा, 10 वर्ष की टर्म अवधि समाप्त होने पर बैंक एफडी से आपको आपके 15 लाख रुपए यानी मूलधन निवेश राशि पुनः मिल जाएंगे। 12 लाख रुपए प्राप्त ब्याज को जोड़कर आपको 15 लाख निवेश के ऊपर 27 लाख रुपए प्राप्त हुए। लेकिन बैलेंस्ड फंड में पूंजी की वृद्धि, कैपिटल अप्रिसिएशन होता है। एक उदाहरण के अनुसार बैलेंस्ड फंड में 10 वर्ष बाद औसत समापन मूल्य 63,90,000 रुपए थे और उसमें 12 लाख रुपए मासिक आय के रूप में प्राप्त राशि जोड़े तो मुझे पुनः प्राप्त होने वाली राशि 75 लाख रुपए से अधिक होगी।
तुम क्या कह रहे हो? ये तो सचमुच आश्चर्यजनक है।
हाँ अमित जी, ये वक्त समझदारी दिखाने का है और अपने एफडी के पैसों को बैलेंस्ड फंड में लगाने का है। बैलेंस्ड फंड पर अधिक जानकारी के लिए अपने एडवाइजर से संपर्क करें।
So I hope you have understood balanced fund or hybrid fund, better known as nowadays. So let me tell you about equity funds now. Equity funds are those funds which invest directly into equities or share market, as you all know. So these funds have different categories again. There are large cap, mid cap, small cap, sectorial, value based, then there is ESG funds. So there are different categories available altogether. Okay, and depending on one's requirement, one can select whichever is good for his or her needs. Okay, let's go to the next slide. So now we have understood about mutual fund. So let's now understand about SIP. Many people think that SIP and mutual fund is same, but SIP and mutual fund is not the same. SIP is basically type of the way of investment. We can do SIP monthly, quarterly, yearly, half yearly basis. Initially, we Indians used to do half yearly SIP into gold, better known as Akshaya Tritiya and Dhanteras. We used to invest in gold at these intervals on a half yearly basis. So let's understand a little about SIP. The goal of most investors is to buy when the prices are low and to sell when the prices are high, but usually that is not possible. Okay, and it is very time consuming, risky, and almost impossible. So what can we do? We can do a SIP. What happens with SIP is rupee cost averaging. So let me tell you what rupee cost averaging is in a very simple method. For example, gold was having a value of 30,000. Okay, so let's do an SIP in gold. Okay, we do SIP every 5 years. Okay, so 5 years ago when I did SIP in gold, okay, the rate was 20,000 rupees. Okay, and every time I am investing rupees 30,000 in the gold. Okay, and current rate is 30,000, and after 5 years, assuming that the rate will increase, it will become 40,000. So at 20,000 I buy gold of 30,000, I get 1.5 tola. Okay, currently if I buy gold at 30,000, I am investing 30,000, the rate is also 30,000, so I will get 1 tola. And after 5 years when I try to buy gold, when the rate is say 40,000, I will get 0.75 tola. Okay, so in totality I have got 3.25 tola. Okay, so and my total investment is 30, 30 and 30. My total investment is 90. Okay, and what I have got is 3.25 tola. So my average investment would be less than 30,000. But if you take the average of the gold prices, the gold price was 20, 30 and 40. So 20 plus 30, 50, 50 plus 40, 90. Again divide by 3, it will be 30,000. So my buying average is less than the market rate of gold, because when the market was low, I bought more. When the market was higher, I bought less. And this is how the rupee cost averaging works. Okay, so there is a small video on SIP also. I'll show you that.
To become healthy and wealthy, both require similar efforts and time. You need to eat healthy food and exercise with discipline and consistency to remain healthy. Similarly, to be wealthy, you need to invest regularly. Investing in equity mutual funds through systematic investment plan can help you to become wealthy in the long term. SIP helps you to invest fixed amount every month in equity mutual funds. Investing in equity mutual funds through SIP gives you multiple benefits. It ensures the discipline and consistent investment. A fixed amount is automatically debited from your account on a pre-decided date and is invested in mutual fund scheme. It gives you the benefit of rupee cost averaging. When market goes up, you buy less number of units, and when market goes down, you buy more units. So your average cost per unit would be less, thus reducing the risk of market volatility. It helps you to achieve your financial goals like retirement, child education and marriage, to buy a car, or to plan for a dream vacation with ease. It gives you the benefit of power of compounding. Investing rupees 5,000 every month can become 2.81 crores in 30 years at assumed growth of 15%. To achieve all your long-term financial goals, stop worrying and start investing through systematic investment plan. Mutual fund investments are subject to market risks.
So I hope you all enjoyed the video and understood what SIP is. So how SIP works for you, as you are seen in the video, you can set your financial goal for an SIP, with an SIP, identify your scheme which you want to invest, decide the amount so that you reach your goal. Look for long-term commitment. You should have a disciplined way of investment. Don't try to panic in the short term of 1 to 2 years when you have a horizon of investment for 5 years or 10 years. Aim for the big picture. Okay, start investing. Stop thinking, start investing. Assume that you, for your salary, if your salary is 50,000, you are getting, and if you are doing an SIP of rupees 2,000, 3,000, just assume that your salary is 47,000 and not 50,000, and you will automatically start saving for yourself, which is very important. Why SIP is better way of investment? Instead of negative return decreases with the increase in SIP tenure. Okay, so if you have 1 year of SIP, the chances of negative return is around 25%. If your SIP is of 5 years, the chances of zero return is almost negative or zero. Okay, so the longer the SIP, the better it is for you. इन्फ्लेशन तुम्हें जीने नहीं देगा और नौकरी मरने नहीं देगी, ऐसे ही लटकते रह जाओगे. एसआईपी कर लो और जीना सीख लो. बेसिकली whenever we do inflation, we never take whenever we do investment, we never take inflation into consideration. Why inflation is so problematic and why it needs to be taken seriously? Very simple. Inflation hampers your investment. What currently today is of say 100 rupees will not be for 100 rupees always. It will increase its price. I'll give you a very simple example how inflation affects and multifolds affect. Okay, for example, let me take a real fact. Salt was costing rupees 2 or 3 per kg around 25-30 years ago. Okay, now the current price of salt is 20 rupees per kg. You just have added a 0 in front of 2. So your inflation risen 10 times. So if your current monthly expenses is say 50,000 rupees or 1 lakh rupees, just try to add a 0 behind it. So if it's 50,000, your expenses will be say 5 lakh rupees after say 30 years. So if you're around 30, for your retirement you need to gather a good amount of money so that you can stay comfortably with your finances and with your retiring age. Okay, otherwise there would be a lot of problem with respect to your finances. I hope I am clear with this part. If anybody has any questions, let me know. So inflation is one of the biggest enemies of investor, and why I need to again consider or point into inflation is very simple. Today's the current inflation rate is around 6% and the current FD rate is around 5%. So net you are getting a negative 1% return on your investment. Fact of the matter is that if you deduct taxation also from your fixed deposit, okay, if you lie in the 30% category and after 5% of your return, 30% will be taken by as taxes. So your net return is 3.5%, and inflation adjusted return is negative 2.5%, which is very high. Basically, if you invest in FD, you are losing 2.5 rupees on every 100 rupees you are investing in FD. Hence, you need to take this into consideration, and you should look for other avenues other than FDs also, because FD is something which is currently not giving very good returns, and it is giving you negative return. Yes, Tia, SIP is subject to market risk. What is the risk? The risk is the market will fluctuate. It will go up and down. And in the short term, it will not give you the desired returns. It might not give you. It can overshoot your expectation, or it will undershoot your expectations, because it is linked to the stock market. So it can come down or go up in a big way. It can have wild swing any side. Okay. So that is about inflation. So you need to beat the inflation. When you are investing, one needs to beat the inflation. If you are not beating your inflation, your investment is actually not going to help you in the future. Please understand that. So how inflation hits your monthly expense? Okay, if your currently monthly expenses are 30,000 per month, after 30 years you will require 3 lakhs a month to just maintain the same lifestyle. Okay, and the education cost, which was 20 lakh 11 years ago, is 34 lakh rupees, and the average SIP lasts only 2 years. So my point is, try to do more SIP, try to do a longer SIP, so that you can get better returns, better inflation adjusted returns, which can help you meet your goals or probably beat your goals. Okay, so 10 times the inflation in 30 years, and we need to catch up that, otherwise we will have a huge problem in our retirement mostly. Next point, insurance. So we all invest in insurances, right? We all have some or the other kind of insurances. So let's gauge out what are the types of insurance available. Life insurance, as we all know, health insurance, and general insurance. So let me briefly tell you what life insurance is. Life insurance is insuring your life. If something happens to you, your family can be taken care of with the amount of the insurance, with the insurance amount. Simple. Health insurance is, if something happens to you in terms of, with respect to your health, the hospital bill will be paid by the health insurance company. And general insurance is your nothing, is very simple. Your car insurance, your bike insurance, your house insurance, or fire insurance, earthquake insurance. There are different types of general insurance. Anything which is not covered under life and health, as simple as general insurance. So types of life insurance which is available. Pure life is term insurance. You pay X amount of premium and you get X amount of cover till the time you pay the premium, or as per the date, as per the terms and condition decided by you and the company between. Okay. What are the insurance cum investment policies? Whole life plan, unit link plan, money back, and endowment plan. Usually I prefer more into term insurance. One can also look into other investment avenues as per their requirement. I usually do not prefer unit linked plans because either it will give you higher of the sum assured or higher of the investment current investment amount, whichever is higher. So for example, if your unit linked plan is having an insurance of say 1 crore and you're pumping in money say 10 lakh rupees every year, at the end of the year it is 10 lakh you have already invested, so your insurance component comes down, and it is not the right, it's usually not balanced in the right fashion. So I do not favor unit linked insurance plan usually. The other plans, whole life plan, money back plan, endowment plan, can be good as per your requirement. Again, your requirement is more of a your requirement is to be known, and then probably one can decide which insurance plan one can go for. Anybody has any questions till now? We can just take one or two questions if anybody has a question. Okay, so let's move ahead. So here's a comparison of different investment avenues. Okay, so if you have invested 1,000 rupees in October 1986, where the different avenues are taking you. So if you have invested in Sensex, your investment value would be 53,854 rupees. If you have invested in a large cap equity fund, it would have been 73,166 rupees. And if you have invested in a savings account, it would be 3,199. Inflation, so it is 1,000 rupees would have been 9,821, so almost 10,000 rupees. And gold, so gold is able to beat the inflation, yes, and PPF to some extent, yes. But when you see the larger picture, the Sensex and the large caps have beaten it to a huge extent. So for wealth creation, one can rely with mutual funds. So that is what I feel. Now coming to the other avenue of investment, which is known as P2P lending. Has anybody heard about P2P lending? What P2P lending is? Okay. So P2P lending is nothing but peer-to-peer lending. It is an old way of lending, but in a new format and in a better way. I'll tell you why it is better. Basically, if I have money and someone else requires loan, usually in the initial days, it used to happen that one used to give that money to your friend, relative, or whomsoever requires the money. Okay, and that person used to give back the money, and with some amount of interest rate. Now the point is, your 100% money is getting invested with one person, and it's 100% unsecure, so the guarantee of it returning is very less. I know he might be a very good friend of yours, a very good relative of yours, and he doesn't have any intention of not giving you the money back. Point is, if he himself has broke down because of losses in his business, jobs, or some other reason, because of bad health or whatever the reason might be, he will not be able to give you back the money. Okay, and at that point of time you lose your 100% investment. Okay, what P2P does is, it basically gives you a platform, and whenever you invest, you don't need to invest your full money with one person. You can invest, for example, You can, if you wish to invest 1000 rupees, you can distribute that. If you wish to invest 1 lakh rupees, you can distribute that 1 lakh rupees into 100 people and give 1000 rupees each. Okay, so your per person risk is only 1000 rupees. Okay, since, and then for example, even if 5% of people are not able to return your money, okay, your risk is only 5%. Okay, and the rest of the people will be able to give you back your money plus the interest. Hence, in totality, your risk comes down heavily and the chances of you making the money are very high. Okay, the returns usually in P2P lending ranges from 15 to 20%. Okay, the taxation again would be in terms of debt tax. Whatever interest you get would be added to your income, and it would be treated in you as per your income slab. The tax would be as per your income slab. So if you fall into 30% tax slab, you will have to pay 30% tax. If you fall into 0%, you don't have to pay any taxes. Simple as that. So I hope everybody has understood P2P lending also. In insurance, I would just like to put two videos, one of health insurance and one of personal insurance, back to back. Okay, first let's take a look at the health insurance video.
हेल्थ इंश्योरेंस इज मस्ट, आज के टाइम में बहुत जरूरी है. नहीं तो होगा क्या, आपने पैसा बचाया, मान लो बहुत एफर्ट किया, बहुत मेहनत करी, पता नहीं क्या क्या करा, और एक एक्स अमाउंट आपने बचा भी लिया. 10 साल 20 साल काम करके मान लो 10-20 लाख रुपए आपने बचा लिया, किसी तरीके से सेव कर लिया, और अगर कोई बीमारी हो गई तो कितनी देर लगेगी उस पैसे को खत्म होने में? हफ्ता, 10 दिन, 15 दिन. कितने लोग प्रैक्टिकली मेरी इस बात से रिलेट कर पा रहे हैं? सब कर पा रहे हैं. और कितनों ने हेल्थ इंश्योरेंस कराई हुई है? रिलेट सारे कर पा रहे हैं, लेकिन हार्डली आधे लोग ऐसे हैं जिन्होंने एक्चुअल में अपनी हेल्थ इंश्योरेंस कराई हुई है. और हेल्थ इंश्योरेंस भी मुझे लग रहा है ज्यादातर ने तो नाम के लिए करा रखी होगी. कितना कवर है? क्योंकि अगर आप कवर ज्यादा भी लेते हो तो प्रीमियम आपको बहुत ज्यादा नहीं देना पड़ता है, मार्जिनली एक्स्ट्रा होता है. उसमें आपकी पूरी फैमिली कवर हो जाती है. मतलब आप, आपकी वाइफ, आपके बच्चे सारे कवर हो जाते हैं. इसको आप हेल्थ इंश्योरेंस कहो, मेडिकल इंश्योरेंस कहो, मस्ट है. ये होनी ही चाहिए. ज्यादातर ऐसे केसेस में क्या होता है, जिन्होंने कोई हेल्थ इंश्योरेंस अपनी नहीं कराई होती है, क्योंकि अब छोड़ तो सकते नहीं उस पर्सन को जो हमारे साथ में है, या खुद अगर कुछ हो गया तो अब अपने आप को ये तो नहीं कह सकते कि हाँ मरते तो ऐसे में क्या होता है, एक तो सेविंग्स आपकी खत्म होती है बड़ी तेजी से, दूसरा क्या खत्म होता है, और क्या होता है, लोन लेना पड़ेगा, उधार लेना पड़ेगा. उस उधार को चुकाने का मतलब क्या है कि आप कभी जिंदगी में दोबारा सेव कर ही नहीं सकते. समझ रहे हो ये प्रॉब्लम कितनी बड़ी है और कितनी कॉम्प्लिकेटेड है ये, कि मतलब जिंदगी में कभी आप पैसा जोड़ ही नहीं पाओगे, क्योंकि जो कमाओगे अब वो सारा उधार चुकाने में लगता रहेगा. या तो आप लोन लोगे बैंक से, या अपने किसी दोस्तों से, यहां से वहां से, जिससे भी लोगे. अगर नहीं दोगे उनको वापस तो दोस्ती खराब करोगे.
So the point here was one should have adequate health insurance. I hope you have got this point. I just like to give you a small example which recently happened with a friend of mine. A friend of mine, his daughter suffered with an illness. Okay, and the bill of the hospital bill was 21 lakh rupees. He was insured by the company where he used to work, and that company paid him around 12 or 13 lakh rupees. Okay, that insurance company paid him 12 to 13 lakh rupees, but still he was short of 8 lakh rupees. That 8 lakh rupees is probably his yearly salary. So it's a big dent when you don't have adequate health insurance. So if you think that you have adequate health insurance by just having insurance of rupees say 5 lakh, trust me, in today's scenario that is way too less. One should have adequate health insurance, minimum say 20 lakhs. Anything below 20 lakhs is not adequate cover. That is what I feel. Okay, the higher the better. You don't have to pay actually a huge amount of premium when you go for a higher insurance. Probably that amount is less than your monthly food bill. I mean to say, probably less than a restaurant visit. If you go to a restaurant, you easily splurge 2-3 thousand rupees. At times that the premium is less than 2-3,000 rupees for an additional insurance. So if you think you cannot take a higher base, you can take a top-up policy at a reduced rate, okay, which is available. I hope you are getting my point, guys. If anybody has any questions, just let me know. And before I wanted you to see even the personal accident. Okay, let's go for personal accident video.
Oh my God, you are hurt. Do you have an accident insurance policy? No, but please call the ambulance urgently. You are severely injured. I hope you have a personal accident policy. I don't have a personal accident insurance. Now please help me get to the hospital. It is really hurting. Your injury is very severe. You will need bed rest for minimum 4 months. How will I manage my loans, household and other medical expenses without salary? How did this happen to you? I hope you do have personal accident insurance policy. No sir, I do not have a personal accident insurance. I have only got a health insurance policy. Personal accident insurance is different from health insurance. Comprehensive personal accident insurance pays benefit towards accidental death, total or partial disability, loss of income, hospital expenses for accidental treatment. These benefits help to pay for loans, household and other expenses. For more details, contact your insurance advisor.
So friends, I hope you have understood that one also needs to have a personal accidental insurance because many things which are not covered into health insurance will be covered into personal accidental insurance. With that, one should also have a critical illness insurance. Nowadays there is a rising trend of risk of different kind of critical illnesses like cancer, for example, and there are paralysis, stroke, which are very common nowadays, which was not as common as before. So one should also have a critical illness insurance so that one is covered, and if something happens, you get a good amount of pay from the insurance company, so that your family does not suffer because of issues at your personal health. Okay. So last advice: plan investment as if you are going to live forever. Plan insurance as you are going to die tomorrow. Be wise, take advice. So just let me run one more video on advisory.
कर ले जो दिल कहे होके तू बेफिक्र है साथ तेरे एक हम सफर।
कितने पैसे कहाँ, इस बात की समझदारी शायद हम सब में नहीं है। उसी तरह किस म्यूचुअल फंड में कितने पैसे इन्वेस्ट करें, इसकी जानकारी अपने फाइनेंशियल एडवाइजर से ही लें। एडवाइस जरूरी है। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स। रीड ऑल।
So friends, we are coming to the end of the session. If you wish to contact us, these are the contact details you are available with you. If you have any other questions, feel free to ask me. Okay, I just would like to take one thing which I had not covered. Yes, there are two important risks which are there with any investment. One is the inflation, which I've already discussed. The other is the concentration risk. Inflation risk and concentration risk are the two most risks which usually a person does not think of. We always think mutual fund subject is to market risk, insurance, because we have a personal risk, we take insurance. But the risk of concentration is never discussed, or risk of inflation is never discussed. So inflation we have already discussed. Let's come to concentration risk. Whenever you do a particular investment into one particular type, for example, if someone is comfortable with fixed deposit, he or she will only do investment in fixed deposit. If someone is comfortable with equity, he or she will only invest in equity. This should not be the case. One should allocate their assets in a better way, so that all your investment is not done into one particular type of thing only. For example, if you are doing fixed deposit, the interest rate can fall down. Okay, that is a very big risk, interest rate falling down. Suppose you are investing in stock market on equities, then then the market can always fall down. Suppose you are only investing into P2P lending, or you are only trying to give loans to other people so that you can get a better returns, the chances of money not coming back is also huge. So there is also a risk associated with that. So there are so many concentration risks one should avoid, and one should allocate their money in different categories or types of investment, because everything will not work at a go. Sometimes equity will work, sometimes fixed deposit will work, and you need to choose your asset wisely. You need to understand why you are investing this particular amount of money and for how much time you are investing, and you need to take all these factors into consideration and then invest wisely. And if you cannot, please consult your financial advisor. I hope I am clear with that. Okay, any questions anybody would like to ask? I can cover up that question and we can finish off otherwise. I'll just wait for a couple of minutes. If anybody just wants to trickle down his small questions, I'm open to question and answer session right now. Looks like no questions. Seems good that everybody has understood everything. Fantastic. Okay, before we end up, I would just like to announce that next Saturday we are having a wonderful session on why home loan should not be paid early. What are the losses associated when you pay a home loan early? Trust me, it is a very different topic which has never been explored, and we have come out with fantastic result, and I'm sure that everybody would be interested, so please be tuned for that. Okay, and I would also like to thank everybody who has helped me with this webinar. I would like to start with Bhavya, Divya, Akash, Nikita, Komal, Satyaprakash, Mittal, Sumit and Hina. Thank you all guys. Okay, with this, since there are no questions trickling down, I would just like to end this session. Thank you very much for connecting. If you like my session, kindly like and share and subscribe to this channel. Thank you very much.